You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. Do you know what's going on in the world of futures and futures options? Well, let's find out together, shall we? It is time once again for TWIFO. My name, of course, Mark Longo from theoptionsinsider.com. Hope you're having a good trading week out there. Remember, if you like what you hear of this show, make sure you check out the full network. Otherwise, you're going to miss the latest edition, the Futures Rundown. Very much a sibling program to this one. And of course, if you want to go above and beyond, check out what we have cooking on the pro. Only one place to go, theoptionsinsider.com/pro. The place to go to learn more. As we learn who's joining us on the old CME Group hot seat today, I'm pleased to welcome back our old friend, Mr. Kevin Green from the Schwab Network. Kevin, welcome back to TWIFO, sir, on this election eve week.
Thank you, Mark, for having me. How you doing?
How are things in Schwab land these days? Probably pretty busy, I would think. Not a lot to talk about, though. Not much really going on.
Nothing at all. Look, it's been a little bit busy. Obviously, we have earnings coming out. Today is actually a very interesting day when it comes to volatility. And then we have the election next week. So a lot going on, staying busy literally every single day.
Well, that's right. There is an election next week. I forgot about that. I'll have to put it on my calendar for next week, listeners, as we keep on rolling right on into the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers, the portion of the show where we break down everything lighting it up to the light side and to the dark side over there at CME Group this week. And if you're looking at the report, listeners, which we tweet out right before the show, CME does as well. So if you follow either of us, you should be able to see it. Then you'll see it is pretty heavily to the red this week. I'm going to say about 80-20, maybe 85-15 red over green this week. That said, our largest percentage movers are to the green this week. So there are some sprigs, some shoots of green to be found amongst our sea of red. But Kevin, as our guest, I will give you pride of place, sir. You think you can handle breaking down a little bit of a light side and dark side for the folks, sir?
Yeah, we can do that.
All right, sir. Start wherever you like. The floor is yours.
All right, let's look at the dark side first, and we'll end on a light note here. To start off at number 5, we had palladium down around 3.21% for the week. Next up is going to be soybean meal, down 3.38%. And we have Kansas City wheat, down 3.45%. Platinum coming in at second at 3.56%. And number 1 on the dark side this week, Class 3 milk, down 4.09% for the week so far.
Yeah, it's been a rough couple of weeks for Class 3 milk. It was number 1 last week as well, off 5.36%. So no love for dairy these last couple of weeks, Kevin.
Not at all. It seems like some of the fear when it comes to the avian flus that are going around here is kind of abated. So catching a little bit of a bid. We can go to the light side if you'd like, Mark.
Let's do it, sir.
All right, so the light side, number 5, we have the communication sector up 2.18%. Coming up in number 4, Bitcoin up 3.75%. At number 3, we have lumber coming in at 6.86% for the week. Number 2, we have oats at 6.9%. At number 1, we have lean hogs up 7.02% for the week. And they have been rebounding here a little bit after that contract change into the December month here. So lean hogs are definitely leading the way so far this week.
Might actually have to sink our teeth, pun intended, into a little bit of lean hogs on the show today. By the way, have you noticed, Kevin, back in the pandemic era, lumber was the most volatile thing on the planet. It was eclipsing crypto. It was eclipsing meme stocks. Lumber was insane. It was moving 20-odd% almost a week, it seemed like. Then, of course, it's kind of fallen off our radar for the better part of the last, I'd say, year and a half. But moving nearly 7% this week. What do you think? Is lumber back, or is this just a little bit of a blip on the radars?
I think this might be a little bit of a blip on the radar. If you're kind of looking at new housing builds right now here in the United States, it's still fairly robust. I mean, we had a nice new home sales number either earlier this week or late last week, one of the highest that we've seen in a very long time here. So I think the demand picture has already been priced in. We might be getting ahead of it when it comes to the interest rate side of the equation. Maybe if interest rates go lower, maybe we do see a little bit more demand. But I think this is just a little bit of a blip on the radar until it can actually prove itself.
Here I was getting all excited about return to form for lumber, sir. You're just throwing cold water all over me there. So thanks for that. Instead, I guess I'll have to console myself with some CVOL movers and shakers, listeners. You can follow along. You can generate your own reports, listeners. Just literally type CME and CVOL into whatever browser you're rocking. That will get you to this dashboard. Once you're there, set the high-low range for the week to 1 week, of course. You can go out as far as you want, but we like to set it for 1 week. It is this week in futures options, after all. And then we like to order it. We got a nice ordered list. You can choose however you set up your list. And once you do that, you'll see, listeners, we're kicking things off with the metals this week, 20.36, kind of unched up slightly, up 0.04, but it's one of the only things it's actually literally the only thing that's up from a vol perspective this week, which is kind of, or at least today, which is kind of fascinating. On the week, it's also hanging out pretty close to the bottom of its weekly range. It's 0.04 off, to be precise. So the bottom of the range was 20.32. The high was 20.5. So not a huge range for metals vol this week. And metals come in at the top of our list. Below it, we have the Treasury price vol, 976. Literally unched today, no move today, and close to its high for the week. The range on the week, 926 on the downside, 984 on the upside, hanging out right now, 976. Then below it, we have the Treasury yield vol. You know, a lot of action in yield vol of late. 160.9 today, off 0.11 today. The range for the week, 153.62 on the low end. The high end, 161.47, so almost pinning the needle for the week right now from a yield vol perspective. Below, we have the ag products. Man, we are all over the place on vol this week. Ag products, 18.67, off 0.2 today. And then pinning the needle to the dark side for the week. The high was 19.31, so almost pinning the needle to the upside for yield vol, to the downside for ag products and metals. We're kind of all over the place. And then FX right back, not quite to the upside, but pretty close. 935 off 0.31 today. If it wasn't for that little bit of a sell-off today, we would be at the high for the week, which is 9.66, the low 8.96. So 0.7 of a point in FX vol, nothing to sneeze at out there. Then below that, we have the commodities CVOL, 35.48, off 1.09 points today. Also pinning the needle to the low end for the week, the high 39.52. Coming in at the bottom of our ordered list here, we have the energy CVOL, 54.8, off 2 points exactly today. That puts it at its lowest level for the week, the high 62.98. So a huge downside move in energy vol this week. But a kind of a weird list this week, Kevin. I was joking about dairy early, but class 3 milk is the number one to the dark side. We have soybean meal. We have some wheat in there. Palladium, unfortunately, and lumber and oats, not really big options stalwarts we can really sink our teeth into. So we could talk a little Bitcoin, or maybe even, dare I say it, lean hogs, or maybe something else. Where should we begin our journey this week, Kevin?
I think we could actually start with the ags, because I think it's very important as we get into the harvest season, or close to the end of harvest, actually, depending on the product like soybeans. And so I think there's actually some excitement there to be had as we go into the winter months.
All right, to the ags, listeners, we go.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, you know where to go to see these reports for yourselves. CMEgroup.com/TWIFO, TWIFO. Once you're there, it might ask you to set up an account if you haven't done so already. It takes about a couple of minutes. It's all free. And once you do that, you have access to all the tools CME has to offer. So definitely worth your time, including the TWIFO reports. Then once you're there, go into that asset class drop down. Ags right at the top of the list. And then we're going to go, actually, we're going to mix it up a little bit in the ags. We'll get to all the grains and oilseeds fun in a second. But I alluded to earlier, our number one percentage mover on the week, and is lighting it up again today, is lean hogs. We haven't talked about these in forever on the show. Up 7.02% since our last show. Up about 5.25% of that coming just this week since Monday. Might be saying, where is lean hogs trading? I haven't talked about that in a while. 83.82 actually, to be precise, out there in the old lean hogs. Up 4.15 points, so again, about 5.25% just since Monday, actually, out there. And in terms of paper, man, we're looking at some size paper out here in the lean hogs. Nearly 100,000 contracts. Again, lean hog used to be kind of a sleeper from an options volume perspective. Today, I haven't looked at it, but I'm going to guess it's probably even beating silver and a lot of the other products we might talk about later today in terms of sheer volume. 95,000 contracts on the tape. Of that, about 60% going up. No 0 day in lean hogs, unfortunately. The D's contract is the closest we have. About 43 days to go. That's doing about 60% of the paper out there. So we're going to hang our hat out there. What is the volume? You might be wondering in lean hogs. It's about an 17.9, up about 0.75 point. Skew-wise, the puts were pretty bid last week, 4.6% bid. Getting juicier this week, 5.5% bid. The calls last week, 2.5% cheap. This week, 5.8% cheap. So looking very equity-like out there. Puts are bid, calls are offered. Even though the big dog out here in terms of volume isn't in December, it's actually in February. The February contract, by the way, the Feb future 85 and an eighth, and we're at the 90 calls. 6,500 of the 90 calls going up this week in December. That is our winner chicken dinner out here in lean hogs this week, listeners. Pretty active all week long. 2,500 on Tuesday, 2,500 again on Wednesday, opening both days. About almost 1,000 on Monday, opening, and about 500 today. A total of about 6,000 open on the strike this week. So it looks like a lot of opening paper on the 90 calls. So some near-dated upside, which I suppose if this recent trend is to be believed, might have some legs out here on it. I don't know, Kevin, are you a big watcher of all things four-legged, sir? And what are your thoughts on this massive move out here in the hogs?
Yeah, I do. I dabble in it every once in a while. You know, I think we're coming into a seasonal period. So just for a little bit of a backdrop, we did get that roll of that contract that happened pretty much last week. You had October 14th. or about almost 2 weeks ago, we had a roll of the contract, and the December contract initially was priced relatively low. I think you just did see a significant amount of bidders really coming into this as we get ready for the holiday season, and then also getting prepared for lighter, slaughter rates, as well as pork production rates too. We actually do see them, for the most part, peaking out at the beginning of November and then dropping off dramatically, pretty much the week of Thanksgiving and then the week after Thanksgiving. So that could actually tighten up supply here a little bit, and I think that's really why you're actually seeing a little bit of a bid being caught right now. There's also the other factor of the flu strains that are going out there. Could it actually impact not only hogs, but also cattle? Is it going to impact weight? All of that's also being kind of priced in. And then the last thing I will say, too, is the increase in export demand coming from China. We'll talk about the grains here in a little bit, probably, but you are starting to see a little bit of a pickup when it comes to export demand. And hogs can be one of those products that China really tries to bid up here in bulk. And that's something that we also have to be mindful of. And I think the market's also kind of pricing that in for now. So nice little move, hitting an area of resistance, though, sitting at around the 85 level. That individual has got the 90 calls, still a little bit more bullish on this contract for now, but a remarkable move for the week, to say the least here.
That's the fun thing about all things futures. I mean, I love equity options, but you're always talking your VIX, your SPYs, your Apples, your Nvidias, that sort of thing. You never know what the hell you're going to talk about in the futures world. It could be lean hogs, it could be Bitcoin, it could be, you name it, crazy, some esoteric product. Which always makes it fun. You're never bored in the world of futures, which is always fun. Let's look really quickly at some more lean hogs paper, then we'll get to some other ag products here. I kind of threw Kevin a lean hogs curveball. He knocked it out of the park, though. Well done. It's a 78 puts, also lighting it up out here this week. These are in December, listeners, doing 5,100 contracts this week. Looks like paper bailing on these, though. The big day was Tuesday, 3,700, mostly closing there. Almost 1,000 on Wednesday, also closing. About 500 today, about only a couple of hundred on Tuesday. Looks like folks are closing all week long, even though there's still 11,300 open on this strike. So if they are closing, they have more to go. I said we're at about an 83, 80 or so in that front future. So 78, still a ways to go. The interesting that they're closing these already. Maybe they're just getting the heck out of the Dodge. Worth noting, it doesn't look like it's a roll up. I mean, potentially to the 80 puts, they traded about 4,100 times, and they were opening this week. So it could have been some, it doesn't line up quite 1-to-1, but it could be some rolling, especially on Tuesday. 2,500 of the 80 puts were trading on Tuesday, mostly opening there. So maybe a bit of a roll up, which does make some sense as lean hogs continue to skyrocket north. All right, we'll end our little sojourn into all things four-legged, but there was indeed some action in the more traditional, shall we say, ag markets. Kevin, what floats your fancy next? You want to go beans, or you more of a wheat guy, sir?
We can talk about beans, and then I do want to bring in something around bean oil, which is actually catching a pretty decent bid over the last couple of trading sessions here. So let's hit the beans.
All right, to the world of soybeans we go, listeners. You want to go into that drop down, and then you want to go here. Don't do what I did. Don't hit the soybean CSOs. We don't want those. We want to go to the grains and oil seeds. And then you want to go straight to the soybeans. You'll see them there. You also see soybean meal and soybean oil. We can, of course, hit on those a little bit later. Soybeans doing some paper. I'd say everything's going to be in the metric of how many lean hogs it is today. And this is about 2.6 lean hogs, listeners. 260,000 contracts on the tape out here in soybeans this week. And let's see, of that, 27% going up in the Jan contract. That is 57 days to go. So we're going to hang our hat out there. Where is soybeans trading right now? 996.5, off a point, and exactly a point this week. So about 0.1% just since Monday. Of course, you go a little bit farther out, soybean meal taking a little bit of a hit, off 3 and almost 3.5% this week. Skew-wise, these skew numbers are crazy, I think is a technical term, which I might want to go dig into these a little more, see exactly what is driving it, see if we got some sort of hiccup in the data. Because looking last week, we have a bid of nearly 18%. By the way, what is the vol, you might be asking? In Jan soybeans, it is 1320, off 5.6 points. So vol annihilation out here in the Jan cycle for soybeans. Maybe that speaks to why the skew has just been annihilated this week. The puts were 18% bid last week. This week, literally flat, 0.1% bid. The calls, 45.6% bid last week. My goodness. They are also 0.1% bid, so effectively flat. So all that juice to the wings, listeners, has all just evaporated this week. Kevin, does that ring true to you? That just a vol annihilation in the beans and crazy juice to the wings that is now gone, sir?
Yeah, a little bit. I mean, we're getting towards the end of harvest here, especially when you're looking at the beans. I believe we're about 85 to 87% done there. And obviously, when you're looking at the the old crop that we've had, I mean, we still have a fair amount of inventory out there, and now you're going to get a lot of these producers really storing up these beans until they actually see better price improvement. Now, what also comes with that, though, at some point, should be a covering of these hedges from these producers, which has been very aggressive over the last couple of months, obviously. Now, we do have some pressure when it comes to Argentina and Brazil. It looks like they have some very favorable weather, and if they have favorable weather, obviously their planting season can be great. They really, and I hate saying it like this, but you need to see some form of a disruption or a massive buy activity that's coming out of China. Now, we are actually starting to get a little bit more of a ramp up when it comes to exports in China to China. When it comes to soybeans and when it comes to corn, and hopefully that's going to be able to continue here. But I think that when you're looking at it over a longer time frame, beans in particular are definitely depressed to the downside, but we're hitting a key area or getting close to a key area of support. We're only about 150 cents away from a key area of support here. So that may be a key, an area where we see some short sellers starting to buy back in. It's just been a very depressed market, and unfortunately, producers have just not had the favorability when it comes to weather and or exports or crop harvest coming from South America to really try to put a premium into the commodity.
Yeah, let's see what we are seeing out here, listeners. And looks like unlikely for the ags. Ags usually tend to aggregate their liquidity in a couple of expiration cycles, usually around the harvesting and planting and that. We're seeing a lot more spread out paper this week, which is kind of interesting. Like we said, a little north of 250,000 contracts on the tape. 27% of that in the Jan contract, but actually our number one most active contract is actually going out to December, which has about 22 days to go. It's the 990 puts. I said we're hanging out at a 996.5 in those front futures there, listeners. So only a few handles out of the money puts, going up 10,024 times this week, listeners. It looks like the big day was Tuesday, 6,300 on Tuesday, and then mostly closing then 2,000 on Monday, mostly opening, and then 1,300 today against an OI of about 6,700. Not much to speak of yesterday. So 990 puts were the big dog, followed by, we got a bit of a tie for number 2. We got the 1020 calls also in December going up about 9,700 times this week. This one actually trading actively all week long. 2,700 on Monday, mostly opening. 2,600 yesterday, also opening. 2,200 on Tuesday, mostly closing, and about 2,200 again today against an OI of 7,500. So a lot of back and forth action on the 1020 calls. And we also have the 980 puts all the way out in March of next year, doing about 9,900 contracts this week as well. So again, weirdly spread out paper for the ags. You don't see this too often. 980 puts. The big day, Tuesday. Clearly, Tuesday was the banger day out here this week, listeners. Of that 9,973 contracts, 8,969 went up on Tuesday. So it's all about Tuesday this week. And pretty much all of that was opening. So folks piling in to the 980 puts, either buying or selling out there, but there are a ton of OI piling in on Tuesday. The OI this week now up to nearly 16,000, 15,700. So a lot of action on these 980 puts. Let's just look around to see if we see any other interesting and or aberrant paper. Well, first off, before we do that, Kevin, what are your thoughts on either these 980 puts going up out here in March? Is that a little bit too far out of the money, or maybe too far out in time for you? Maybe you prefer these 990s going away in 22 days. How you like these downside plays in the soybeans, sir?
Well, the 990s are going to have a little bit more of a delta there. So, any type of movement to the downside, willing in the next 22 days should actually be beneficial for that contract. And I think that's once again kind of this play that you're seeing as far as if the amount of short shorts getting into this market right now. But if you actually have that March contract, it gives you a little bit more time. And I think you're actually seeing this across the curve right now, a little bit more, it's a little bit more tighter than what we're probably normal or used to, if you will. Now, if you kind of go back, when I was talking about when you're looking at soybeans, back in around 2018, 2019, we started seeing a little bit of a range between the let's say 815-ish area, and the top end of that range is 945. So if we're going to go down to those levels until buyers really start to step in, those short positions could actually be beneficial or actually be profitable, if you will. But the one thing to just kind of keep in mind, once again, technical area of support we're coming up to. A lot of this stuff is already being priced in. A lot of the bear stuff is already being priced in. So you got to be on the lookout for a short covering rally. And I think once we get to that point, maybe it's going to be in February or so, getting ready for the planting season for next year, I think we might actually see a pretty decent and aggressive move to the upside and a retracement of even 50% from high to low over the last, say, 4 years, 5 years. You're sitting at around 1,300 on that contract. So it's something to just be mindful of. It's been a decent short, but we are kind of getting towards the end. We might be 80% of the way there where we actually see some value being priced in for beans.
All right. And you mentioned soybean oil as well, listeners. So pop out of the old soybeans and go down 2 slots in that product category, listeners, to soybean oil. Once you do that, you'll see it's put up about 142,000 contracts this week. So the oil, no slouch volume-wise as well. 45 and about a third is where it's hanging out right now in that front future. Up about 1.25 points this week. So kind of bucking the trend. The soybeans and the soybean meal. A little bit of downside this week, but soybean oil popping hard. Kevin, what was it about soybean oil that caught your attention this week?
Yeah, so you're seeing kind of a little bit of a premium for palm oil. So I think right now you're kind of seeing a little bit of a readjustment in demand when it comes to bean oil. And so that, aggressiveness when it comes to that demand, I think is also pushing up prices. You also have a strike that was only supposed to last for 24 hours. I'm not sure if they actually came to an agreement here, but there's an a strike in Argentina where it comes to the dock workers. And this has actually happened a lot recently. Like it seems like almost every other month they're striking. But that also could actually have an impact when it comes to crush operations. And we could see maybe some of that price action transferring over to mill as well as the oil side of the equation. So for bean oil itself, palm olive premium, I think there's a rotation for value there from those that are actually importing the commodity, and then also that port strike could also impact logistics and crush operations, which both of those are going to be bullish for oil in the near term.
All right, let's see what's lighting it up out here this week, listeners. Well, let's go out to the Dees contract that has 22 days to go. That's where 70% of the paper went up this week. So it's all about Dees all the time this week, listeners. Let's see, the vol in soybean oil this week, listeners, 35.8, up nearly 3 points on the week. Skew-wise, not a heck of a lot of evolution. The calls, 1.1% bid last week. This week, 1.3% bid. The puts, 1.8% bid last week. They have swung a little bit. They're 1.9% discounted now, but anything close to a point in either direction really is mostly flat to me. So not a huge evolution out there. A lot of paper, though, on the 40 puts. Remember I said we're trading about 45 and a third in that future all the way out to Dees there, listeners. 40 puts lighting it up all week long. Today, though, the big day by far, 9,300 going up today against an OI of 12,000. We have 4,300 yesterday, 5,700 on Monday, 1,500 on Tuesday. Opening all week long. So, folks, piling in to the 40 puts. Again, those are about 5 1/3 handle out of the money puts. Again, total of nearly 21,000 going up on the week out here. Looks like some near day to put action. You think, Kevin, maybe they were speculating on that on that strike, and maybe it looks like a lot of paper today. So maybe the fact that strike ending early driving some of this put paper, sir.
Yeah, I think so. I mean, obviously, if you're kind of looking at a longer-term trend of bean oil, or pretty much any of the commodities for that matter, the trend has been to the downside. When you have these short-term disruptions that could occur because of strikes or crush operations and things of that nature, you can get some buyers kind of stepping in. So I think the put action is probably more of a longer-term trade for the most part, and rightfully so. The trend is to the downside, but once again, you could get another 3-4 points move to the upside here for bean oil if this strike situation in Argentina is not resolved. And also, if you get some geopolitical news, which I'm sure we're going to talk about energy, and we'll get to some of those geopolitical factors as well that just kind of hit the wire over the last 15, 20 minutes.
Well, if you want to hit energy, I think we can make that our next stop. What do you say? Let's off to energy. Off to energy, listeners. We go.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
Just when I was thinking, Kevin, that we had a rare week off from all things energy. There wasn't in our movers and shakers in either direction. We go back to, and it's truly the inescapable complex these days, is it not, Kevin?
Oh, yes. I mean, it depends on the day. I mean, you have the macroeconomic backdrop of, lack of global expansion, especially coming out of China. United States, for the most part, is priced in. And then you have lackluster data coming out of Germany, as well as just the EU in general. So a lot of pricing pressures to the downside. But over the last 24 to 48 hours, Mark, I mean, we've gotten some bullish takes. Reports that OPEC may not bring additional production online in December. That was a little bit of a bull catalyst yesterday. And we actually, Axios just reported around 15 minutes ago that Iran is planning on a significant, using the word significant, retaliatory strike on Israel. And we actually did see crude oil popped almost $1 on that news. So that's something to keep on your radar. It's something we cannot fade at this point.
Now, I was just saying this on the show a week or two ago. We were talking about crude, and there's a lot of downside going on. We saw a lot of people positioning in puts and everything, and it just struck me as people were really whistling past the geopolitical graveyard. They were just like, oh, this is all over. We all know if past is prologue, unfortunately, in the Middle East, it never really is that simple. And so, yeah, Israel said they were done, but, Iran, I guess, are now deciding they need to add an extra leg to this, unfortunately, this growing event. It's unfortunate. So let's take a look through the lens of WTI, which right now, if you look at net on the week, listeners, isn't really processing the news, at least quite yet, net on the week. Kevin talked about some bullish action yesterday. Net on the week, we're still right around the 70 handle coming into the show, 70.3. That puts us off about 1.5 points on the week, or about 2%. Remember, we've been talking for a while. We got down into close to the mid-60s, and people thought if we broke 65, that was really look out below territory for crude. Then, of course, we rallied, got into the low 70s, and then right back now kind of vacillating around this 70 handle. In terms of paper out here this week, it's been a pretty action-packed week. 800,000 contracts. Again, nothing to sneeze at in WTI, which is normally somewhere between, 400 and 500,000 usually. Of that, 56% coming up in the Dees contract. Has 15 days to go, listeners. So we'll see if we get some near-dated action maybe going up today as a result of this news, maybe in the last few minutes. Let's see, vol-wise, we were talking earlier, they were crushing a vol across the board, and energy they were crushing the most aggressively of all, which again was another sign that people were kind of whistling past the graveyard. Usually if you're a little bit reticent about a sector, you're not willing to annihilate the vol, yet they were. And we're seeing that again net this week. We have the Dees vol 40.65, off nearly 4 points this week, 3.8 points on the week. I have a feeling maybe if this news holds, that might start to turn. Let's see, skew-wise, not a big evolution on the puts. They were 6.9% bid last week, almost exactly the same, 6.8% bid in Dees this week. The calls, though, 9.1% bid last week, 13.4% bid. So a little bit of a bid popping in there. We also see that in the 2 week out November contract, 18% bid to those calls. So like in some of these near dated going out a week, 2 weeks, we are seeing some substantial bids to the upside there. So maybe some of that being reflected in this news we're talking about out here. And really quickly, let's look at the paper out here. Looks like the big dog this week, 75 calls in December, going up 28,000 times. The big day was actually Monday, 10,600. Looks like folks were bailing on them then. Then we have about 8,000 going up today against an OI of 26,000. So potentially they were taking some off, but maybe if this news has some merit, maybe they're piling into some more upside out there. 6,300 on Wednesday, 3,200 on Tuesday, opening on both of those days as well. Kevin, what are your thoughts on what we're seeing out here in WTI, especially in light of this most recent news, sir?
Yeah, what I found very interesting, kind of to start the week here, was the aggressive sell-off to the downside, and I did think that it was actually a little bit overdone. When you're tracking this event or these chain of events over the last couple of months here, you've only seen about maybe a $2 to $2.50 premium being put into not only just crude oil, WTI, but also on Brent. But we had around a $4.50 move to the downside. I felt like it was a little bit aggressive. We did see some, positive action yesterday when it came to crude, and now we're seeing some follow through because of this news. But in order for crude to actually really catch a sustainable bid, you not only need the geopolitical risk to really kind of spark the flame to be able to try to get some of these shorts to really cover, because there's a lot of managed money that's been shorting crude pretty much since it's been touching around $78 here. And then you're going to need the fundamentals. Now, the EIA report this week was actually pretty good. When you're looking at gasoline demand, relatively high. And if you're looking at gasoline stockpiles or inventory, we were actually very close to 2-year lows. So that's kind of telling you something. If that's organic demand, maybe there's a little bit of a price floor there. And with OPEC not bringing additional production online in December, I think that once again gives us maybe a little bit of confidence that the $67, $65 level can hold. Mark, I am the type, though, that below 65, I do get a little bit concerned. Historically, once you start seeing crude really kind of disconnect from the equity markets, it generally does mean that maybe consumption levels or consumption rates are starting to decline here in the United States. And then also, if you're looking at a monthly chart too, we're kind of flagging out, and we break that $60 level. You could actually put $40 on the radar for crude. We're not there yet, but that's something I'm keeping my eye out on when it comes to the technical.
Yeah, I was just checking out some of these reports while you were talking here, and they're coming out of Israeli intelligence, so usually a pretty good source. But they're also talking about maybe attacking before the election on Tuesday, which of course anything that happens now has to be viewed throughout the political lens. It's a strange choice for Iran. You'd have to think a massive attack before the election would certainly not benefit the party that is in power right now, and probably benefit the party that is anti-Iran, you would think, in the polls. But I don't know, an interesting choice. That's a strange stuff. Maybe they're oblivious to our U.S. political schedule, but I have to imagine not, if you're forcing one in before the election on Wednesday. Interesting choice. Maybe not what I would have expected, but intriguing stuff. That's what makes an election cycle. Maybe this is our October surprise, Kevin, but in November and in another country. What do you think?
Look, every day is an October and or going to be a November surprise when it comes to this election. I can't wait for it to be over with. I think we're going to see a lot of action and fireworks within the commodity space, and in some areas, metals, and then also the energy products. I do believe that we will get some volatility there, but like you said, it's very interesting that they would do it. I would also say too, and I hate being cynical for saying this, but war does pay, and unfortunately, sometimes you have leaders around the world that look at these escalations and try to keep them perpetually going, even though it might not be best for humanity.
Well, you mentioned the outcome of the election. I was looking today at some of the binary venues. Some of these binaries on the election, they all settle on January 7th. So obviously a little bit of history playing into that. So if you're trading a lot of these binaries on the election, listeners, hoping to cash a bunch of checks on Wednesday morning, you might be a little bit surprised out there. So just bear that in mind. Since we're talking election and the markets, let's wrap it up here in equities, listeners.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, as we're coming into the tail end of the show here, we are seeing a lot of red on the screens today, and the equity space, NASDAQ selling off aggressively, nearly 2.5%, S&P off about 1.5%, Dow off 0.5%. It's the mere laggard out there, and our old pal Russell 2000 off nearly a full percent now. Vol continuing to trend north. VIX cash hitting north of a 23 level earlier this morning. So things getting a little bit frosty out there. Kevin, I don't think this latest news of Iran is going to help anything. In our final few minutes here, obviously the election looming large out there for everything. What are your thoughts on what we're seeing on the markets and what we're going to see for the next few days heading into the big day, sir?
Yeah, well, Mark, these markets have been let's say crazy, right? When you're looking at these, the type of price action that's been in there. You mentioned the Iran news. Vol actually dropped on an intraday basis. So, I'm not sure if the market's really, putting that on the main stage or on its radar. Look, there's going to be a lot of volatility, I believe. We already had a lot of that being priced into the VIX futures. That vol has been priced in for a very long time, last 4-5 months or so. So I think right now, when you're looking at the equity space, especially for today, there's a re-rating that's going on. We had earnings from Meta and Microsoft yesterday. Guidance came in light. You're starting to see a lot of companies missing on the top line when it comes to revenue guidance moving forward. And I think the market's just repricing a lot of these equities out, and rightfully so. We haven't had a really meaningful pullback. We're only about 2.5%, 2.75% from the highs on the E-mini S&P future. So a pullback, I believe, is going to be healthy. I would be a little bit, let me say this, the election trade, be very cautious with it, right? Everybody's piled into one boat right now, and any type of adjustment or any type of surprise, if you will, we could see a pretty decent unraveling of that trade. And I would kind of focus on the commodity side. I'm keeping my eye out on oil as one of the plays for the election. And then I'm also looking at the metal space, silver and copper in particular.
So it sounds like you think this sell-off across the equity space might have a little bit of teeth to it, sir, if we can start to get some repricing in, or is this more of a kind of buy the dip mentality, sir, which we've seen a lot in the past?
Well, yeah, everybody's always trying to buy the dip. Yeah, I think you have this wedge pattern that's been in place for the last 3 months or so. Officially broke today. We're now below the 20-day moving average. We need to actually have some buyers pretty much stepping in here right at these levels, 5,700, 5,725, right at these levels for the S&P 500. If not, I do believe that we could go back and actually test around the 5,620 level. There's some options positioning there that has been gaining a lot of traction over the last couple of weeks. I've been mindful of that. And once again, I think it's healthy. I think right now, if we can have a little bit of a reset going into the holiday period, we know that barring nothing happens with the election, we should have favorable volatility for the end of the year, having that Santa Claus rally. And I think this would be a decent time to kind of pick out some stocks that you think could be of value. And so, yeah, I do believe that we probably will see maybe another day or two of this pullback. You got de-risking for the election, and then you might see some buyers really trying to step in. And then we have the Fed meeting next week too. No one's even talking about that, Mark. And with the economic data we've had over the last week and a half, a good jobs report tomorrow, if that's going to be the case, I don't see the Fed really cutting by 25 basis points in November. I think the market should price that out. I think the long end of the curve, 10s, 20s, 30s have already done that. That's why the vol has been high there. I don't think the 2-year has done that as aggressively to back out that 25 in November. And that could be another reason why we see some downside pressure in the equity market.
All right, listeners, coming up against, we'll see if we can squeeze a few of you on here with some of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, let's get some of you folks now on the time we have remaining. Kevin, we have one of our pro members who listened live. He chimed in at the beginning of the show. He said he's ready for a full hour of Class 3 milk. He's got some cookies next to him. Oh, well, I think we disappointed him, Kevin. We dropped the ball there. We could have done a whole hour of dairy. What were we thinking?
Maybe next time. Right?
Next time.
Maybe the eggnog trade and the Santa Claus milk trade is still in the works here.
I apologize for all you dairy lovers. I'm lactose intolerant, so maybe that's why I don't put the dairy on the show. It's just subconscious to me now. But next time, we'll hit you up with all the dairy, folks. All right, dairy lovers out there. Who knew in the audience? All right, our actual kind of fun seasonal. It is Halloween after all, Kevin, and our fun seasonal options poll. We actually have two of them out here for you. We'll have you guess on two of them, give our thoughts. First off, we said, in the spirit of the season, which option strategy scares you the most? Is it naked short straddles, naked short calls, naked short puts, or other? And we also have a futures-inspired one for our futures rundown show, because we know futures are intimidating to a lot of people. We said, which elements of futures trading do you find the most intimidating? Is it the confusing margin? Is it the accidental delivery? I mean, no, that's not really a thing, but people are still scared of it. Or the weird and wild products, or something else entirely. Kevin, where do you vote on both of our spooky seasonal polls, sir? We'll start, I guess, with which option strategy scares you the most. Maybe you have your own alternative you want to suggest.
No, I would say the naked short calls. I mean, you could say the straddles, but, you still have, potential there. But the naked short calls really puts you at some risk to the upside. And that's something that you just do not want to have, especially on a leveraged product like futures options. So that's just something to be mindful of. The second question, I would say accidental delivery, and it's more on the futures options. If you forget to close out a position, or you forget to manage the position the right way, you forget about the expiration day, waking up the next morning with a contract or 2 or 10 could be a little bit scary for you.
Or getting that proverbial truckload of lean hogs dumped on your lawn in the middle of the night, Kevin. Nobody wants that.
Exactly.
Let's see what our audience is feeling out here. In terms of what scares you the most about futures, it's the confusing margin. 50% of you are going that way, followed by 41.7% scared of that accidental delivery. And then 8.3% chiming in with something else. Some of them, including Vernon Griffin, saying he's scared of having to predict the futures markets. I could see that. And then on the options side, what scares you the most? It's still naked short puts, 37.5%. Interesting. That to me is the most finite risk on this list, but that scares you the most. Okay. Number 2 is 31.3% for naked short calls. Number 3, naked short straddles, dropping even more, only 18.8%. That is my choice. Naked short straddles scare me the most. And then 12.5% for the infamous other, including time spreads, and so we got to vote for naked short people. That scares you. Our audience, they're feeling their oats out there today. All right, listeners, that music means we've come to the end of another journey through the world of futures options. A spooky one out there today, some blood red on the screens out there in the markets. Kevin, want to thank you for joining us, even if we did forget about the dairy today. But if folks maybe want to talk to you about some dairy, where should they go? What should they do?
Mark, I always appreciate you having me on. They can follow me on the Schwab network. We're there 24 hours a day, 7 days a week. I'm pretty much doing hits every day on the network. You can also follow me on Twitter or X at KG Bull and Bear. You can follow me on LinkedIn as well. I don't know my name is there. You can just type in Kevin Green and search Schwab and it'll show up. So I appreciate you. I hope everybody has a prosperous trading day and has a good Halloween.
Yeah, get some full sizes out there on the old trick-or-treat scene. Then you know you're hitting gold. So check them out over there on the Schwab Network, listeners. And you know where to go to check out these reports. Follow along with the show. CMEgroup.com/TWIFO, TWIFO, the place to go to kick the tires and light the fires. That's going to do it for us. I have to go get ready to spook some kids. So I'll be busy doing that. Hope you all have a great Halloween. Back again tomorrow for some vol viewing. Will we all be drunk on candy and sugar? We shall see. And then after that, exclusively for our pro friends, one final time for the week with options oddities, theoptionsinsider.com/pro, the place to go to get your hands on that. Then we're off for the weekend to digest all of our candy and, of course, the impending election. Back again on Monday for the option block. Tuesday, you don't want to miss it. Set your calendars for our live election night special. So if you're sick of watching all the talking heads on the various TV shows give you their spin from whatever side of the aisle they're on, we'll give you it right down the middle with some markets fun mixed in there as well. Talk you off the ledge if your candidate of choice is losing. All sorts of fun out there, listeners. Join us for the live election special. Then if I still have any voice left, I'll be back on Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.